Good morning, everyone. We are watching live market outlook for Monday, 23rd of January 2012. Markets are pausing during the late Fridays and today's Asian session after strong gains. This especially comes to Euro after extending recovery from last week's fresh high at 126.22 to come close to the 130 psychological barrier. The main pressure comes from Greece, as today's Eurozone Finance Minister will meet and decide the terms of a Greek debt restructuring. They are ready to accept as a part of a second bailout package for Athens after negotiators for private creditors said they could not improve their offer. Resolving the issue of a Greek debt swap is key to putting Athens' debt on a sustainable path and avoiding a chaotic default that could threaten the whole currency bloc. After several rounds of talks, Greece and its private creditors are converging on a deal in which private bondholders would take a real loss of 65 to 70% on their Greek bonds. Officials close to the negotiations said. But some details of debt restructuring, which will involve swapping existing Greek bonds for new longer-term bonds to bring Greek debt down to a more sustainable 120% of GDP in 2020 from 160% now, are unresolved. So the main focus actually remains now on today's meeting, and Euro, despite quite negative outlook from Greece, remains quite positive this morning after a gap lower opening in the Asian session. Just a reminder that most of the Asian markets are closed due to Lunar New Year, and all eyes are turned towards Japan, and this is actually the only active market during the overnight session. It's going to last, I think, for a whole week. Euro shows some strength again in early hours of European session. We're going to take a close look at the Euro later on and see what are the forecasts and expectations for the next 24 hours, or wider picture now depends on our requests. The gold remains well supported and it jumped to its highest level in more than a month during the Asian session, as Far East futures, Tokyo futures actually rose on buying from investors, but gains to be limited by a weaker euro after Greece and its private creditors failed to strike a crucial deal to avoid a messy default. The investors are again looking for today's meeting to get some more clues about further development of the crisis. We hope that some solution will be found, as quite high risk remains on the Greece's default. It's not just a matter of Greece, but high risk then comes on the spreading crisis throughout the Eurozone, possibly even worldwide, and that could have catastrophic results in the near future. So also the investors for gold are looking for today's meeting that will give us some more details about further price action of the yellow metal, while crude oil remains under pressure still, as despite the increasing risk of higher and stronger sanctions that US and Eurozone are planning to impose towards Iran, that might completely block exports of the crude oil from Iran, and with their main customers from China and some Far East countries. From today's calendar, not much to be seen, as Monday usually brings us a lower number of events to be released. As mentioned, the bank holidays in China. Australian PPI came during the overnight session. 0.3% was the release compared to 0.4% forecast and 0.6 previous month release, previous quarter release, pardon. From Canada, leading index at 1330 GMT, monthly release forecast 0.6% compared to 0.8% previous month release. And the last one from Eurozone at 1500 GMT, consumer confidence, slight improvement forecasted for today, -20 compared to -21 previous week release. From a technical outlook, we're going to see now the past session and the past week movements and see what are the next steps for each instrument that we are looking for. Starting with Euro, we can see on the 4-hour chart that Euro was in a steady rally for a past 1 week, rallying from last Friday's low at 126.22 and hitting so far 129.84, just ahead of psychological barrier at 130.00. Corrective pullback is now underway and initially hit 128.89 with the overnight gap lower opening dipping down to 128.75. This is the previous high of 13th of January, now reverted to strong support where the dips were contained so far. Also 20 days moving average maintained the positive structure and contained all the dips for now. With the recent action after European opening, seen the pair again rallying higher with the gap now being covered, and then the regain of 129.50 now, our next barrier high of last intraday high of last Friday is required now to refocus level at 129.84 and then possibly to resume higher towards 130 and levels above 130. On the downside, the initial strong support lies now at 128.75, and holding above this keeps the upside in focus, while loss of 128.75 would open the way for further easing. 128.45 comes next, which is 38.2 Fibonacci retracement of the 1 week upleg, and the 19th of December higher platform at 128.40. So this is actually our strong support at this level. This is actually the break point for Euro, with loss of 128.40 to expose next strong level at 128 zone, which marks 50% of Fibonacci retracement. Also previous high of 17th of January. That will completely dampen the bulls and the signal resumption of the broader downtrend. Hourly studies are improving currently as the pair is regaining momentum, though the study is still below their center lines, but pointing higher. That gives additional optimism for possible retest of 129.84 and 130.00. On the daily outlook, the pair holds a positive track after breaking above 20 days daily moving average. That was capping the downside for past 3 months or so from early November 2011, and sustained break with the 20 days moving average currently holding the dips, keeping the upside in focus. Next significant barrier comes at 130.75, which is the high of highs of 3rd and 4th of January. Then we have 131 zone and 132 peak of 21st of December 2011. Also there, below this 131.60 currently is the daily 55 days moving average as resistance between the previous 131 and 132. As mentioned, the improving daily studies might see some further recovery as long as levels mentioned previously on the lower time frames hold the downside. Cable is consolidating latest gains from 152.33 13th of January low, especially after breaking the key barrier at 155.00. and extending gains so far to 155.72, just ahead of 156 level that marks 55 days moving average on the daily chart. Studies on the near-term outlook are still positive. However, overextended conditions might see some stronger correction before the bulls reassert. So far, the dips were contained at 155.26.30 zone, with 20 days moving average on hourly chart so far holding the downside, and increasing hopes of retest of 155.72 and further resumption of the short-term uptrend towards 156, and possibly to extend higher. On the downside, as mentioned, 155.26 offers the initial support ahead of a strong one at 155.00. That's previous resistance, now reverted to support. Only loss on the downside of 154.50. It's a higher low of last Friday, also close to 38.2 Fibonacci retracement of the ascent from 152.33 to 155.72. Also 20 days moving average on 4-hour chart would soften the short-term structure and likely open way for a further easing of the pair. A sustained break above 156 to resume higher, and focus next significant level at 156.68. This is the high of 3rd and 4th January, and it's the high of year 2012 so far. Dollar yen maintains in a way positive footpath after latest strong rally through initial barrier at 77.00 and extension up to 77.31, testing a strong resistance zone. Keeps the upside in focus as corrective dips were contained at levels around 77 zone. At 76.90 was the lowest, with 20 days moving average in 4 hours chart so far containing and maintaining the positive structure. Regain of 77 where the market currently hovers keeps focus at the upside, as 4-hour studies are still in the positive mode and looking for a test of previous highs 77.32 and 77.18.17, which is the 90 days moving average on the daily chart. That was so far capping the upside. Above this, the dynamic resistance next comes at 77.39. Currently it's 55 days moving average ahead of levels at 77.60 and more significant barriers at 78.00, 78.20, previous highs of November, December 2012, break of which to confirm the bottom at 77.50 and the open way for extension higher towards initially 200 days moving average at 78.41. That would signal stronger recovery. On the downside, immediate support lies at 76.90, 76.75, lots of which would be risky in the short term, as it might open levels at 76.65 and the key support at 76.50 zone, below which would turn into weakness. It's significant at this point that break above 77.30 is basically required to break above the current congestion and allow for a stronger recovery. Otherwise, the risk remains on the downside, as broader picture tone is still more skewed towards the downside. The dollar Swiss is in corrective mode. Near-term price action actually shows the pair in corrective mode. That is currently losing traction after testing 93, very strong support zone, better seen on the daily chart, which marks the lows of 3rd of January. This is the yearly low so far, and also 55 days moving average on the daily chart, as well as a lower Bollinger Band. Dips were so far contained at this level, but mild recovery so far stalled at 93.76 as 20 days moving average is capping for now the upside, and the fresh weakness is underway. Immediate risk is seen on the retest of 93 zone that might trigger further weakness and open next levels at 92.42, low of 21st of December 2011, and Fibonacci level 38.2% at 92.00. That's the retracement of the uptrend from 85.66, 27th of October 2011 low to 95.93 high of 2012, posted on 9th of January. This will also signal a temporary top and allow for a stronger recovery, while loss of levels at around 80 zone would dampen the current the broader bull trend from 70.67 record high, and open way for a further easing of the pair. From commodities, a quick look at gold, as someone already requested the question. As mentioned, the gold extended through a strong barrier at 1667 and 1669, posting fresh high at 1673. However, it's significant at this point that the yellow metal still holds below the main bear trend line drawn of 1920 record high of gold from September 2011. As long as below here, the outlook remains more negative on the larger picture, as the gold is still in the downtrend on the daily chart. Back to the short term, 4-hour studies are still in the positive field, as 20 days moving average currently at around 1660 holds the downside, and the scope is seen for further extension higher, and the test of our next significant levels at 17. First of all is the trend line at 1673, and then 1700 ahead of 1756 and 1763, lower top set of 2nd and 8th of December 2011, break of which is required to signal stronger recovery. 200 days moving average, the 1641 holds the downside for now on the daily chart, with the gold currently attacking at trend line and the 55 days moving average, and just above this at 1678 it's 90 days moving average on the daily chart. So we have quite a strong barrier zone here, where the gold is currently moving, with break here required to confirm the short-term positive tone of 1522 and open levels 1700 and then 1756 and 1763. On the downside, immediate risk, immediate support stands dynamic support at 1659, 20 days moving average, while loss of 1645, 1640 zone, higher lows of 18th of January and 20th of January would be risky in the short term, and it might signal temporary top and allow for a stronger pullback. For now, holding above 1645 keeps the positive tone in play, and looks for further extension higher for the previously mentioned, for test of previously mentioned levels. The crude oil continues to ease after hitting fresh high at 103.72 on 5th of January. So basically during the days of January, from the beginning until now, the gold is in the downtrend. Significant level at 97.90, 98.00, where is also 50% Fibonacci retracement of the ascent from 92.70 to 103.72. Has been lost. The price extended down to 97.43 to possibly focus next Fibonacci level at 96.93 and the low of 21st of December at 96.79. So this will be our next target. Corrective bounce from latest low at 97.43 posted over. Is now underway with the levels at 99.20 expected to limit upside for now, while a strong barrier at 100 dollars per barrel, whereas also 20 days moving average on 4-hour charts caps the upside and maintains the negative short-term tone of crude oil.